Hey everyone, and welcome back to the channel where we demystify the complex world of hard-to-borrow stocks and potential short squeezes. Today, we're diving deep into a specific name that's been lighting up our screens, Universe Pharmaceuticals Inc., ticker symbol UPC. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's talk about UPC. Universe Pharmaceuticals Inc., ticker UPC, operates in the healthcare sector, drug manufacturers specialty and generic with a $4.02 million market cap. They manufacture and distribute traditional Chinese medicine products for chronic conditions in the elderly in China. This stock has seen intense action, up plus 13.67%, an incredible plus 113.51% over 5 days, and a staggering plus 134.7% over 30 days. Such momentum often prompts the question, what's driving it? What is cost to borrow and why it matters? A key short squeeze indicator is the cost to borrow CTB. Short text, cost to borrow when shorting, investors borrow shares and pay an annualized fee, like interest. High CTB signals strong demand to borrow but limited supply. This scarcity makes borrowing expensive, with fees easily exceeding 100% annually as lenders demand a premium. Understanding CTB is crucial for identifying stocks under potential short pressure. Why this stock is hard to borrow right now? UPC has landed on our hard to borrow screener for compelling reasons. The current annualized cost to borrow fee is an astronomical 759.3%. Highlight CTB. This CTB has also surged plus 756 percentage points over the last 5 days. Scarcity is extreme, only about 3,000 shares are currently available. With an estimated float of 0.3 million shares, 3,000 available means the well is dry. A composite squeeze score for UPC sits at 58.2. Squeeze mechanics explain. How does this lead to a squeeze? A short squeeze occurs when a stock's price rises sharply, forcing short sellers to buy back shares to limit mounting losses. This covering fuels further price increases. For UPC, with shorts paying 759.3% annually, continued surges like its over 134% monthly jump could compel covering. The extremely limited supply of 3,000 borrowable shares means any covering could create intense buying pressure. However, high CTB doesn't guarantee a squeeze. It can also signify strong short conviction, where sellers willingly pay a premium for their bearish bet. Dilution risk check. We always check for dilution risk. Dilution, when new shares are issued, increases supply and can completely negate a squeeze thesis. For UPC, no recent diluted SEC filings -1/-3/424B were found in the last 90 days. No recent reverse split was found for UPC either. This is a positive for a squeeze thesis as new shares aren't flooding the market. Just a quick reminder before we move on, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. What should you watch for with UPC? Monitor that cost to borrow. If it stays extremely high or climbs, and available shares remain critically low, pressure on shorts persists. Today's volume was strong at 4,677,200 shares, 1.6 times its 30-day average of 2,902,753 shares. Sustained high relative volume and continued upward price action are key. Conversely, a sudden drop in borrow fees or a significant increase in available shares could change the dynamic. UPC presents a compelling and unique case in the hard-to-borrow universe with its extreme 759.3% CTB, minuscule 3,000 borrowable shares, and a tight 0.3 million share float. Combined with recent price surges and a clean dilution check, UPC is certainly a stock to watch closely. This is purely for educational purposes, highlighting the mechanics of stocks like UPC. If you found this deep dive helpful, please like, subscribe, and let us know in the comments what other hard-to-borrow stocks you're curious about.